This week's Know Your Cash word of the week is interest rates. My name is Arabile Gumede and the buck stops here. One of the hottest topics right now in the world of finance, investing, money, business has certainly been South Africa's interest rates. They've recently dropped again, now this time to their lowest in recorded history, 3.75 for the repo rate and 7.25% then for the prime lending rate. But what are interest rates? Who comes up with them? And why in the world do they matter so much? Well, when you're taking out credit, one thing you want to do is have the lowest interest rate, which is the service fee you pay for borrowing money. That's what you want to try and get. How you do that is determined on your credit history, etc., etc. Now, the repo rate is how much or what rate South Africa's banks or the banks in the country lend from the lender of last resort, which is called the South African Reserve Bank. They, of course, hold all our money, whether it be backed by gold or not. And if a South African bank wants to borrow from the South African Reserve Bank, they would do it at a rate currently of 3.75%. That is known as the repo rate or the repurchase rate. Now, we, however, borrow from the institutions, the banks themselves, and they sell it to us at a prime lending rate plus an additional fee. Why there's an addition, I'll explain in a second. But the prime lending rate means that the bank needs to make some sort of profit between how much they've paid for the money that they're borrowing you and how much they're going to give it to you for. That profit right now stands at 3.5%. So you will always find the difference between the repo rate and the prime lending rate being 3.5%. Okay, so now you want to lend money from the bank, and the bank says, we will give you the money at an interest rate of 8%. Now you ask yourself, why, when the prime lending rate is 7.25%? The difference between the two is usually the premium for the risk that you possess. Why risk? Because there may be a chance that you don't repay the bank, or you may have defaulted in the past on previous debt, or your credit record just isn't high enough. Now, you want that credit record to be as high as possible in order to get as close as possible then to the prime lending rate so that you can borrow at what is essentially the best rate you can get from a bank. So the lending rate itself is determined by the South African Reserve Bank. The repo rate, that is determined by the South African Reserve Bank. And they, every 2 months, generally, that is, every 2 months, meet and decide on South Africa's interest rates. And that certainly explains how you get to where we are right now and the different factors that influence it. Hopefully a discussion for another day.
Know Your Cash is supported by the South African Insurance Association.